Get ready, because the crypto world is absolutely buzzing today. We're diving headfirst into a news cycle that's moving at lightning speed, bringing you the updates you simply cannot afford to miss. Today, we're kicking things off with a massive endorsement from a global icon who sees Bitcoin as the future. Next up, we're looking at the companies quietly building the digital financial infrastructure of tomorrow, using Bitcoin as their foundation. Then, we're breaking down a fascinating analysis that maps out Bitcoin's next potential peak, and it might be closer than you think. And finally, we dissect a dramatic bull trap that shook the market and triggered massive liquidations. Stay tuned for all the details. Make sure to smash that like button, subscribe, and hit the notification bell so you never miss an update. A global icon's bold prediction: Bitcoin as universal currency. What if the world's most popular podcaster is right, and Bitcoin is poised to become the global standard for currency? This idea is gaining serious traction, especially as major institutions start to pay attention. Joe Rogan, the immensely popular host of the Joe Rogan Experience, has thrown his hat into the ring, suggesting that Bitcoin has the strongest potential to become a universal currency. Speaking with Sam Altman, the CEO of OpenAI, Rogan highlighted Bitcoin's decentralized nature and its potential to act as a hedge against inflation as key factors supporting this vision. This isn't just a casual remark. Rogan's platform is known for bringing complex topics to a massive audience, often sparking widespread discussion and influencing public perception. His endorsement adds a significant layer of mainstream validation to Bitcoin's long-term prospects, especially for those who have been critical of traditional, centralized financial systems. Rogan's perspective resonates deeply within the cryptocurrency community, where Bitcoin is often lauded as a digital store of value. His willingness to discuss and endorse assets that challenge the status quo has historically drawn attention from influential figures in the tech and finance worlds, such as Michael Saylor, a prominent Bitcoin advocate and CEO of MicroStrategy. The conversation also touched upon the idea of Bitcoin as a global reserve asset, a concept that has been debated for years, but is now gaining more serious consideration. However, the path to Bitcoin becoming a universal currency is far from straightforward. Significant hurdles remain, including the need for robust and accessible infrastructure. Widespread internet access, ease of use for digital wallets, and the development of scalable transaction systems are crucial for Bitcoin to function as a day-to-day medium of exchange. Furthermore, regulatory uncertainty continues to be a major obstacle, particularly in countries with strict monetary controls, as governments grapple with how to integrate or regulate these new digital assets. Interestingly, Rogan's comments arrived at a time when institutional interest in Bitcoin is visibly growing. U.S. Treasury Secretary Bessent recently indicated that the Treasury is exploring ways to acquire more Bitcoin in a budget-neutral manner. While no concrete policies have been enacted, this exploration signals a significant shift in institutional sentiment, suggesting that Bitcoin is increasingly being viewed as a legitimate financial instrument worthy of consideration for national reserves. The influence of Joe Rogan extends beyond just financial discussions. Following his comments, a meme token inspired by his name experienced a staggering surge of over 20,000% within a single day after its listing on several decentralized exchanges. While this particular token is highly speculative, its meteoric rise demonstrates the powerful impact Rogan's endorsements can have on market behavior and investor sentiment within the crypto space. While it remains to be seen whether Bitcoin will indeed achieve Rogan's ambitious vision of universal currency status, his statements undeniably contribute to the ongoing evolution of digital assets. As discussions around digital sovereignty, inflation, and decentralized finance intensify, Bitcoin's role in the global financial landscape is set to remain a focal point of intense scrutiny and speculation. But is this just talk, or is something bigger being built behind the scenes? Next, we're diving into the companies laying the groundwork for digital finance's future. Building the digital future, Bitcoin Treasury firms as infrastructure pioneers. Could companies holding Bitcoin be the unsung heroes building the financial highways of the digital age? They're using their Bitcoin reserves to fund innovation, much like early utility companies powered the Industrial Revolution. Bitcoin Treasury companies are increasingly being compared to traditional infrastructure firms, as they are actively laying the groundwork for a future dominated by digital finance. Analyst Mark Moss suggests these companies are strategically leveraging their substantial Bitcoin holdings to capture value during what he describes as a historic wealth transition. He uses the compelling analogy of 1910s factory owners who invested in electricity infrastructure despite the existing reliance on gas. Similarly, today's Bitcoin treasury companies are positioning Bitcoin not just as an investment, but as a fundamental financial tool for the digital economy. Moss points out the unique advantage these firms possess. They can generate profits from existing business models while simultaneously investing in Bitcoin's long-term potential. They act as arbitrageurs, capitalizing on the valuation differences between traditional markets and the burgeoning digital asset space. Their ability to issue equity, raise capital, and navigate the inherent volatility of the crypto market distinguishes them significantly from conventional tech or financial stocks. This strategic positioning allows them to finance the infrastructure for what is being termed the electric future of digital assets. Several companies are already making significant moves in this direction. LM Funding America, for instance, reported holding 155.5 Bitcoin as of June 30, 2025, a stash valued at approximately $16.7 million. Elsewhere, KindlyMD recently announced the closure of a $200 million convertible note offering, with a portion explicitly allocated for Bitcoin acquisitions. These actions underscore a clear trend of corporate adoption, where Bitcoin is evolving from a speculative asset into a cornerstone of corporate financial strategy. The gas pipes to electric future analogy is particularly insightful. It reflects a profound shift in how value is managed and transferred. Just as traditional pipeline companies facilitated the logistics of energy for industrial growth, Bitcoin treasury companies are now enabling value transfer in the digital era through decentralized networks, smart contracts, and the burgeoning world of tokenized assets. This indicates a broader movement towards decentralized finance, DeFi, where Bitcoin's role is increasingly infrastructural rather than purely speculative. Despite this growing institutional embrace, the broader market remains somewhat cautious. Bitcoin treasury stocks are currently trading at a notable discount compared to traditional market benchmarks. Reports indicate that some of these companies are valued at merely 1.6 times their Bitcoin holdings, a stark contrast to the S&P 500's average price-to-earnings ratio of 30x. This valuation gap raises questions about whether the market is underestimating the innovative potential of these crypto-linked companies, or simply overreacting to the current volatility in the cryptocurrency sector. Furthermore, even Bitcoin's impressive surge to a record high above $124,000 in August 2025 hasn't uniformly benefited all Bitcoin treasury stocks. Some have remained stagnant or even declined, partly due to significant market events like $1 billion in leveraged liquidations and over $290 million in Bitcoin ETF outflows. This divergence between the underlying asset's price performance and the stock valuations highlights the intricate challenges of managing a portfolio that straddles both traditional and digital asset classes. While the ultimate economic impact of these Bitcoin treasuries is yet to be fully realized, it's evident that these companies are moving from the periphery to the center of the financial system. They are becoming integral to the infrastructure of the digital economy, fundamentally reshaping how value is stored, exchanged, and invested in the 21st century. But how predictable are these market movements, really? Next, we explore a fascinating theory about Bitcoin's next major price cycle. Timing the market. Is Bitcoin's next peak mapped to October 2025? Could Bitcoin's price cycles be more predictable than we think? One analyst suggests a recurring 35-month pattern might point to the next major peak happening sooner than expected. Independent analyst Colin Talks Crypto proposes a fascinating theory. Bitcoin's market cycles might be far more regular than commonly assumed. By re-examining the last 3 major bull market advances, measured from their respective bear market lows, he has identified a remarkably consistent 35-month span from bottom to peak. If this pattern holds true, it could pinpoint the next potential cycle top around October 2025. Colin's analysis stems from a desire to reconcile conflicting charting data he encountered. He meticulously tested 2 different methods for dating past market cycle bottoms. The first method, which he calls Measure A, yielded cycle lengths of 37 months, 35 months, and 35 months. The second method, Measure B, produced lengths of 37 months, 28 months, and 35 months. Colin favors Measure B due to its perceived consistency. He acknowledges 2 potential caveats. First, the unconventional choice to mark the 2010 low as the start of Cycle 1, which helps achieve the 37-month reading. Second, Cycle 2 exhibited a double bottom, meaning the length can vary between 28 and 35 months depending on which trough is selected. Despite these nuances, the consistent 35-month reading in the third cycle reinforces his pattern hypothesis. Under this 35-month framework, the current cycle, which began with the bear market low in November 2022, would naturally reach its 35th month in October 2025. It's crucial to understand that this model focuses solely on timing and does not predict specific price targets. Colin himself stresses the concept of diminishing returns, noting that percentage gains in each subsequent cycle tend to be lower than the preceding ones. This suggests that while the timing might be predictable, the magnitude of the gains could decrease over time. Bitcoin's market cycles have historically been analyzed through various lenses, including halving dates, shifts in liquidity, and macroeconomic policy changes. Colin's approach, however, bypasses these specific drivers, focusing purely on observable market behavior. The implication of a repeating 35-month cadence is that investor psychology and capital flow patterns might be settling into a rhythm. This rhythm could be long enough to allow initial disbelief to transform into widespread euphoria, yet not so extended that excessive speculation can build to unsustainable levels. However, as the saying goes, history rhymes but doesn't always repeat exactly. External factors, such as unexpected policy shifts, economic recessions, significant inflows into Bitcoin ETFs, or major security breaches, could potentially alter or extend these cycles. Even if October 2025 proves to be a significant turning point, the top might manifest not as a single peak price on a specific day, but rather as a broader range or cluster of highs occurring over a period. For investors with a long-term horizon, a date-based framework like this can be invaluable for strategically staging entries and planning de-risking maneuvers. It helps avoid the common pitfall of chasing parabolic price movements late in a cycle. For short-term traders, this analysis serves as a contextual tool rather than a direct trading signal. Factors like market breadth, funding rates, options skew, and on-chain distribution data remain critical for precise timing. The key takeaway from Colin's analysis is that if Bitcoin's bottom-to-top rhythm consistently hovers around 35 months, the window for a potential cycle climax is opening in the fourth quarter of 2025. Investors should anticipate diminishing percentage gains, expect wider price swings as this period approaches, and always remember that models are guides, not guarantees. This information is not financial advice. But what happens when the market surges and then suddenly reverses? We're breaking down a major bull trap that just shook the crypto world. Bitcoin's wild ride, $124K high, bull trap, and mass liquidations. Bitcoin just hit a staggering new high, but the celebration was short-lived as a classic bull trap caught many investors off guard, leading to massive sell-offs. In August 2025, Bitcoin reached an impressive all-time high of nearly $124,400, marking a significant milestone. However, this surge was swiftly followed by classic indicators of a bull trap, a deceptive market pattern where prices appear to break out to new highs, only to reverse sharply, trapping traders who entered based on the expectation of continued upward momentum. This reversal triggered widespread liquidations, affecting both individual retail investors and large institutional players. highlighting the extreme difficulty of effective risk management in such a volatile market. The rapid ascent was accompanied by a notable influx of Bitcoin into major exchanges like Binance. Analysts interpreted this sharp inflow as a sign that large market participants, including institutional traders and algorithmic desks, were strategically positioning themselves for potential sell-offs. Arthur Hayes, a co-founder of BitMEX, underscored the critical importance of managing risk effectively at market peaks, warning that failure to do so would inevitably lead to market forces imposing that risk. The concept of liquidity zones, areas in the order book where significant buy or sell orders are concentrated, became a key focus for traders assessing potential price stability and the risk of sudden, sharp movements. The volatility wasn't confined to Bitcoin alone. Ethereum and other major altcoins, including Solana, experienced correlated price swings, mirroring Bitcoin's sharp reversal. This synchronized movement indicated a broader shift in overall market dynamics, prompting investors to reevaluate their exposure across the entire cryptocurrency ecosystem. While Bitcoin continued to attract speculative capital, many altcoins struggled to maintain momentum, raising concerns about the sustainability of the broader crypto bull market. Historical analysis of previous bull cycles, particularly those in 2017 and 2021, revealed similar patterns of sharp inflows followed by rapid reversals. Market observers noted the critical role liquidity zones played in stabilizing markets and mitigating volatility during those periods. The recurrence of these patterns has intensified scrutiny on underlying market structures and regulatory frameworks, as stakeholders seek to better understand and mitigate the risks associated with such abrupt price corrections. In the current market environment, a cautious approach and robust risk management strategies are paramount. Traders are increasingly relying on on-chain data and the depth of order books to distinguish between genuine bullish breakouts and deceptive false signals. As Bitcoin continues to test historical price levels, the market remains in a state of flux, presenting the possibility of sustained growth or a period of consolidation. The primary challenge for investors is discerning a legitimate upward trend from a trap set by inherent market volatility. And that's a wrap on today's critical updates. Stay tuned for our lightning round recap and all the ways you can stay connected with Bitcoin Bulletin. That's all for today. Joe Rogan sees Bitcoin as a universal currency. Treasury firms are building digital finance infrastructure. A 35-month cycle might point to an October 2025 Bitcoin top, and a major bull trap caused liquidations. Don't miss out on future updates. Like this video, subscribe to Bitcoin Bulletin, hit that notification bell, comment below with your thoughts, and follow us on all social media platforms.